got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
Okay, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call. It's the episode 331. It's the 12th of July. Today, 11 a.m. GMT plus 8 here in Singapore. So if it's your first time here, a big welcome. We do this currency call every Monday to Friday. And the currency we analyze, the schedule is as follows. Monday, which is today, Aussie and Kiwi. Tuesday, Euro. Wednesday, Pound. Thursday, Yen and Gold. Friday, Canadian Dollar and cryptocurrencies. So in this currency call, you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, so on Friday, there was the ECB monetary policy meeting. So let me get Kim Hong here, currency analyst at LCMS Traders, to give us a breakdown and share his views about it. Kim Hong.
All right, happy Monday, everyone. Okay, let's just dive straight into the minutes. Share screen. Where are you? Okay. So what you're looking at right now is the super lengthy minutes that I don't recommend you guys to read. Okay, so what's the key takeaway from these minutes? All right. Before that, I think I'll just let you guys know, previously during their meeting, monetary policy meeting in June, yeah, they held interest rate unchanged. Quantitative easing remains as usual. Okay, at the default pace. What else did they say? I think they were mentioning something like premature exiting of quantitative easing. Okay, can have negative impact on the Eurozone economy. Okay. Because previously, like I've mentioned, the Eurozone is not one country. It's made up of, I think 20 over countries. So if they have to do things slowly, okay? They have to do things cautiously, I would say. Because if they were to just exit from their, PEPP, the Pandemic Emergency Fund, okay, purchase program, or the other one, what's that? The other one? Yeah, PEPP, correct. Then, premature exiting of the PPP or the other TLTRO programs, may actually lead to, I don't know, irreversible damages and things like that to the economy, to the Eurozone economy, okay? So they were actually mentioning this, Lagarde was saying that, yeah, just take things slow and see how it goes. Now, however, in the meeting minutes released last Friday, okay, it kind of seems like they actually talk more than just saying, we are not going to exit the purchase program prematurely. Okay, so the first point, let me search up for okay, in view of okay, so basically they did have discussions on QE tapering. Okay, over here, it says, in view of the better outlook for growth and inflation and the associated upside risk, it was, however, also argued that to provide the same degree of accommodation, asset purchases should be scaled back somewhat. Okay. Now, so there's discussion on that. Reason is because we see here, financing conditions in the Euro area were seen to be more favorable in June than they had been in March, which is earlier this year, or December last year, okay? Implying an increasing degree of accommodation if the current purchase pace was maintained. Now, yes, no doubt there's a discussion on this, but they eventually felt that, okay, the current recovery that Eurozone is going through is actually still at the early stage and an early stage. Okay, let me just stress that. Okay. Over here. So you can see that it was stressed that the recovery was at an early stage and lacked robustness, and as it depended heavily on policy support. Okay, so that is actually why the ECB president, Christine Lagarde, okay, she was like highlighting, emphasizing the fact that, you know, we shouldn't do things in a rush. Okay, we should wait for recovery to go on for a few more months at least, okay, before exiting our QE program, be it the pandemic relief fund or, you know, reducing the TLTRO. Okay, let me see if there's other points to go through. Yeah, so basically that's the main takeaway from the release minutes. So my interpretation of these minutes is that it's actually more hawkish than what we have been seeing for the first 5 months, okay, of the year. Okay, at least right now, the whole QE tapering talks, okay, like what Jerome Powell is puts it, you know, the meeting, the talking about meeting. Okay, so the European Central Bank, they were actually holding discussions on tapering QE and things like that, which is actually a good move. All right, and as you can see from the European Eurozone economic data releases as well, the recovery has been going on well. Now, the only concern right now is the whole Delta variant, all right? That can actually turn things around, all right? But as of now, you know, I'm actually seeing some bullishness in Euro, okay? Now, besides the minutes, recall that last Thursday, they actually did a policy review as well, okay? That will further add on to the bullishness of the Euro, in the short term, at least. So with that, okay, we should be looking forward to the next ECB monetary policy meeting, which will be held on 22nd of July, okay? Now, I'm pretty sure the central bank will be shedding more lights on, you know, the whole policy review, you know, the whole inflation target change that they are adopting right now, which is 2% and not below, but close to 2%, okay? So more details will be provided on this whole policy review. And of course, we will be paying attention to any further discussions on QE tapering, maybe like, you know, the pace of tapering will be reduced, is considered to be reduced, or, you know, maybe roughly when will we see a reduction, a QE tapering and things like that from the ECB, okay? So from now till the next meeting, I think we have probably like some 2 weeks, okay? I don't think there's much economic data releases from will be released, okay, from the Eurozone as of now. So I think we will just look forward to the next meeting, and yeah, I'll update you guys again on any changes that the ECB will be throwing out from now until then. Okay, with that, I'll hand it back to Junwei.
Okay, thank you so much, Kim Hong. Yeah, so let's head to the charts right now with the dollar index, and we have Scott Andrews from Forex Briefcase Australia. Scott.
All right, hi everyone, and thanks for joining us again. I see a few new faces as well in the call, so welcome. Now, US dollar. So we did see on Friday, there wasn't really anything in regards to a catalyst. And what we saw was, you know, a bit of a pullback. And we've got right now a small reaction to the support level in the low 92s. And there was the Fed monetary policy report that did come out late on Friday evening. It was around 11:30 GMT plus 8 time. And you know, overall, a lot of the pairs really, you know, bounced significantly as well. We had the Aussie, the Euro, the Pound, the Kiwi, and it sort of personally, I'm, you know, a little conflicted because what we're seeing as well tonight, what we do have, and I'll just bring that up. We don't have any significant US news out, but what we do have is the bond auctions, and I'll just share this screen here. So what we've got just on the EchoFin calendar here is we have the 10-year note auction. and that's at 1 a.m. tomorrow morning, GMT +8. And what I'll pay attention to is how that transpires. Now, the reasoning behind that, if we see a lack of upward pricing where we currently are, which was the previous at 1.47%, that's just indicative that the markets are not really too concerned about the increase in inflation currently, because we're seeing equity markets rally some more. We are seeing people call out a real strong pullback in, the Dow Jones, S&P 500, and NASDAQ, which would, spell a bit of an upward push for the US dollar, but we're just not seeing that. Now, just to finish off, I just want to touch upon the news that I'm looking for on the calendar here, guys. So I've got Forex Trading Asia up now, economic calendar for Tuesday. Tomorrow, we've got this is really quiet actually today, but for tomorrow, we do have the CPI data coming out. We've got core CPI month on month. That's going to be really interesting to see if that cools off, guys. We really could see the US dollar move, below that 92 support level, and we could see it calm down a little bit. But for now, it's probably going to be a dynamic situation with some whipsaw events as well with the US dollar. So in conclusion, just with the chart back up, just be cautious and see what happens tomorrow morning, and then also tomorrow evening as well. But it's looking like we could have some selling pressures present on the US dollar for this week, guys.
All right, thanks, Scott. Okay, so today is Monday. The currency in focus is Aussie and Kiwi. So today we are with Jin Dao Tai, founder of LCMS Traders, a multi-million-dollar trader, trading an account with more than $15 million on a daily basis. All right, Jin, I'll pass it to you for the currency in focus.
All right, thanks for that, Jinwei. Good morning and welcome to the brand new week. This is going to be, I believe that this is going to be a big week for the markets ahead. Why I think so? Just jumping straight into it, nothing to delay right now. Looking at the forextradingasia.com economic calendar, just going to run through that brief outlook of what could happen this week. There's a lot of news happening. You can see here today, take a little bit of a breather. We have had all the news come out already, but tomorrow, it starts tomorrow onwards. Early tomorrow morning, we have some Aussie news. I don't think these will be big price movers, but we do have a lot of Euro news, which I'll tell you more about tomorrow. The Euro dollar, we look at tomorrow with the US CPI numbers. Look at CPI numbers expected to go month on month from 0.6% to a 0.5. So a slight drop together with the core CPI month on month going from 0.7 to a 0.4. So you can see here, looking at CPI possibly dropping down a little bit. CPI is the inflationary number for the US dollar. So it looks like it might temper down, which could actually be a little bit of a good thing for the US dollar. Why I say that is because if the CPI keeps increasing, keeps growing too quickly, then we might actually see the Fed take some action to temper it down. So for it to drop a little bit might be a little bit of a good thing there. Following on from that, the action starts on Wednesday onwards. On Wednesday at 10 o'clock, we have the Reserve Bank of New Zealand rate decision, looking to hold at 0.25% with the rate statement. Pay attention to the rate statement. I don't think there'll be surprises in the rate decision, but the statement will give you a very good idea of what could happen. Don't think they'll talk about any changes in rates, but the commentary about tapering, are they going to reduce or start planning to reduce the stimulus that was in place because of COVID? So the rate statement is going to be quite crucial here. At this point, I think that New Zealand dollar, looking at the rates holding at 0.25% and rate statement possibly being a little bit positive, we might see some strength come around for the New Zealand dollar. Okay. Then from that, we have the pound CPI numbers, which I will tell you about when we talk about the pound dollar on Wednesday morning, okay, leading up to that. And then, well, Bank of Canada rate decision. This one, we won't be in time to talk about it on Friday because we talk about the CAD on Friday, but I'll do this in the Traders Club. So watch out for the rate statement, rate decision, and monetary policy report for the Canadian dollars in the Traders Club. And then on Thursday, back to the focus of Aussie and Kiwi dollar. On Thursday, we are looking at employment numbers for the Aussie. Look at employment change, looking at a 30K positive change for employment. We're looking at unemployment rate possibly dropping from 5.1 to 5%. If the Aussie unemployment rate does drop to a 5%, I think that would be very close to its natural unemployment rate, which means that we're possibly going to see some upside in the Aussie dollar coming from because of this news. Okay, so we're looking at some positivity coming around from the Aussie dollar. I will show you what I mean on the charts as well as we get to that. We have a whole bunch of Chinese data to be released on Thursday morning, and Chinese data with the China economy quite correlated or stimulating the Aussie side. We might see some correlation there, and the GDP looking to go quarter on quarter, looking to go from 0.6 to 1.3% might be a bit of an upward tick or lead to an upward tick in the Aussie dollar as well. So something to look out for in terms of the Chinese data. Year on year, yes, it is going from an 18.3 to an 8.1. It's going to be a big drop, but this is also coming out of this whole COVID situation. So we're going to expect that little bit of a drop or that big drop in the GDP numbers, but it's going to be, market also knows that it's almost impossible to sustain a 2-digit GDP number year on year for an extended period of time. So we've got a lot of pound news to be released on Thursday as well. We'll talk about that when we talk about a pound dollar. And then on Friday, we have the New Zealand CPI numbers quarter on quarter, looking to go from 0.8 to a 0.7% quarter on quarter, year on year from a 1.5 to 1.4%. So what you see here again, I think that similar to the expectation for the US dollar, that slight downward tick in CPI numbers or inflationary numbers might be positive for the currency, because if inflation goes too quickly, then we're going to see the Reserve Bank take some action to temper it down. So as that steady growth comes around, or as that steady growth is being reflected, we're going to see possibly some good news, take it as good news for the currency. Leading on from that, a lot of yen news. We got a press conference, outlook, policy statement. So pay attention on Friday. We're going to look at some, well, leading up to that, we're going to look at some yen possible trade ideas there. And then we have the retail sales number for the US. But still not a great number at minus 0.4%, but it would be a good improvement from previous month of minus 1.3%. So you can see again, as we head towards the end of the week, we might see some positivity for the US dollar coming around in terms of the retail sales number and also the consumer sentiment and expectations, looking to go from 85.5 to an 86.5, a slight upward tick in terms of US dollar consumer sentiment. So, this is why I say that we're going to see quite a big movement, quite a lot of movements in the market this week. We have got US news, we've got CPI numbers for New Zealand dollar, policy statements for the yen, we've got all the pound news, employment numbers to be released, we've got Aussie employment numbers to be released as well, and CPI numbers for the UK, and well, wait, what was it? The rate statements for New Zealand dollar. So a lot of news to be released today or this week. What could happen? Looking at the charts here, This is the Aussie dollar on the H4 time frame here. Last week when we spoke about it, it was sitting at about 7516. I said it was going to sit across a little bit before coming down to test the 7452 support level. It's done exactly that. It went at the 7513 level. It dropped down, hit 7452, and now it's at that level. What I think is likely to happen at this point, again, similar to last week, was that it's possibly going to come down and test this level again. Come down and test this level again. Same thing it did end of last week or end of 2 weeks ago, where it tested that level and possibly bounce back up towards the 7600. This is also in condition that we see the good employment numbers coming around for the Aussie dollar. So what I would be looking to do, I wouldn't sell it into this level. I wouldn't even try and sell it down for that 50, 60 pips. I would look to see how it reacts towards this 7452 level. Look to see how it reacts at this level. And if it bounces off this level, you could be looking for buying opportunities. Let's say about 7470. You could be looking at a 20 to 30 pip stop loss for a very good 120 pip take profit level. Say a 30 pip stop loss, 120 pip take profit level towards the upside. This would be one slightly of a counter trend trade, counter trend or range trade, which also hence highlights that risk reward ratio of at least a 1:3, 1:4 risk reward ratio towards the upside. I think this would be a good chance to take that trade if it bounces off this support level. If it does break through, if it does break down from this point, I would be very, very careful. Why I say that, if I look at it on a daily chart, no, if I look at it on a weekly chart, you can see that if it breaks this support level, it's quite a lot downwards towards the 7.1 or 7.2 level before we see any support again. So be very careful once it breaks. If it does break this support, I think that anywhere below, we're going to see a lot of volatility. We're going to see traders test this low point, but I'm looking for that bounce, for that upward move. It will look very enticing to trade it downwards, but be a little bit careful if it breaks down from this point. I'll be looking for that range to trade within that 120 pip range for the Aussie dollar. Now moving on to the New Zealand dollar, same thing last week. We said that if it was going to break that 7013 level, we could look for it to come down and test this 69 level, this .69 level. Did exactly that. It almost ran along this red line, hit that level and bounced back up. At this point, I think that we're going to see a bit of a downward move again. So leading up to the Wednesday news of the rate statement for New Zealand dollar, I think that we might actually see it come down before again bouncing off this point. So what you should be looking for, if you're looking to sell it down, you only have about a 50 pip profit level towards the downside, but your stop loss could be an equal 50 pip. So you're looking at a 1:1 towards the downside, not super attractive, I would say. However, if you're looking to buy it back up, same thing like the Aussie dollar, look to trade it back within that range, I could say that you're looking at a 6930, 20-30 pip stop loss for a good 60-70 pip take profit level back into that range towards that upside. You'll be looking at a 1:2 or almost 1:3 risk reward ratio towards the upside. But this again will test your discipline, where you sit there, wait for it to come down, test this support level before bouncing back up. This bounce back up would depend on what they say at the rate statement for the New Zealand dollar on Wednesday morning. If they come out positive, then we're going to see it bounce back up. If they come on the rate statement and say nothing, then we could see it drop lower of this 69 level. But if it does break below this point, again, as I go into the weekly time frame, you can see that it's not a great view, not a lot of support at this point. The next level is 68.15, which means that if you're going to trade it down, it's only about another 70 pip towards the downside. Still possible, but a lot of volatility to be expected if it breaks below this 69 level towards 68.15. So be very careful. I would still look forward to it trading within this range, bouncing off this 69 support level.
Okay, thank you, Jin. Okay, so I've just launched a poll. Let me know where you guys come from. Yeah, so while you guys are filling up the poll, just a quick disclaimer here. Any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Yeah, so I see a lot of you coming in from the Telegram channel and you have been enjoying our trade signals absolutely free. But the question you might have is that we have told you when to get into a trade, but you do not know where to exit. So I'm going to get Daniel here to share a little bit about the Traders Club, where not only they give you the signals earlier, but they also tell you the strategy behind it. Daniel.
Yes, thank you, Jinwei. So as you can see here, for those who have joined from the Telegram channel, you have always been receiving the trade signals late. But here in the platform, the LCMS Traders Club platform here, you will get all signals 5 minutes earlier and also learn the strategy behind it and the reasons for every signal and take profit level. So that really in the long run, you not only learn from the signals, but learn how to trade better. Now let me show you here. You can see it here. All the signals are issued 5 minutes earlier, very clearly. Based on the time here, we have the signal stamp on buy, what currency pair, what price, and what stop level, and 3 possible take profit levels. Now you may ask, which 3 take profit levels should we do? Now we also have the signal analysis coming in. We don't, as I mentioned to you, we don't only tell you the signals here, just like the Telegram channel, which is late. We tell you early here. We tell you why we take the trade. You can see that we're based on the 5 steps analysis. We will tell you the reasons behind it, and you can learn from it very, very clearly. Now, as I said, that TP1, TP2, TP3, where do you exit out, right? We will also inform you when it hits TP1, the various take profits target. For example, here TP1 at 20 pips, where we have to look at the market at that point of time and to decide whether or not to secure the profits or continue to let the trade run. So if possibly, for example, possible secure profits means we ask you to exit out at TP1 here. Okay, so it is really something that we'll look forward to if you join us here. One of the questions that a lot of people have asked is, can I get a notification as well? Now, this platform is available as the web, desktop, and mobile application, which means you can access all the contents anywhere, anytime, and receive the mobile notification of our signals on time. Now, this club membership is access to the platforms. It's really worth thousands, but if you have a chance now to join for $49 a month, go to tradersclub.lcms.com.sg, and this is really, without a doubt, the least you could do to make sure you achieve your best in your trading. Now, this price can change anytime, so do get aboard right now. So just got to scroll all the way down. You see the $49 a month button. Click on it, fill it up, and I'll get to see you in the Traders Club, and see you then. See you.
Okay, thanks so much, Daniel. Yeah, so there are a lot of other features inside, like weekly webinars, education videos, and a lot of widgets that you can use. So do click on the link that I put in the chat to see the other features available. All right, so we have come to the end of the session today. We'll see you guys tomorrow for the Euro currency call. Thank you so much and goodbye.